In this video, I will show you how, by using the power of multi-timeframe technical analysis and order flow, you will be able to find the best swing trading opportunities in the market. So we will be taking a pair, analyzing it both from a technical and order flow perspective, and by using the combinations of these two different approaches that you can have to the market. By the end of the video, I will show you exactly where you can be looking for a potential trading setup on the actual pair that we are analyzing in the market. Now, if you're new to the channel, I'm a top author on the TRADINGVIEW platform and I share free education and analysis on my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, so today what we will be doing in this video is giving you guys a full update on the situation that we currently have on EURUSD to see where we can be looking for the next potential capitalizing opportunity on this pair. So make sure you stick to the end of the video, because first I will give you the full analysis for the pair, obviously both from a technical and in order flow perspective, to see what the biggest banks and institutions are currently doing on EURUSD, and obviously by using the combinations of the technicals and the order flow, we will see where we can be looking for a potential trading opportunity. And as usual, I will try to keep the analysis as educational as possible so that you will learn exactly what you need to know when you're analyzing the market. So let's start our analysis here from the monthly time frame. Now, if you're asking yourself why starting from the monthly, because the monthly, weekly, and daily time frames are the best time frames when it comes to the direction of the market, obviously combined with the order flow. And then the 4-hour time frame is the best time frame for entry when it comes to swing trading. Now let's start our analysis from the monthly. The first thing that we can clearly see, and that we had already spoken about, is that the market had reached this level before finding all this strong demand and support that brought the market to actually make this move to the upside. Then again, the market melted to the downside, found extreme support at this area, so failed to break lower, respected its zone, and started a strong move to the upside. Specifically, if you remember in our last breakdown on the pair, what did we say? We said that clearly the market had created this candle here. Now, when you have a candle like this, what do you expect? You expect the next candle to fill in the wick. I made a YouTube video specifically about this candle. So when you have the candle wick, which is bigger or the same size as the candle body, you expect the next candle to fill in the wick. The reason is that the wick of the candle is actually a retracement on lower time frames, as I will now show you. For example, quick examples of the actual pattern are here. When the market created this candle here, obviously you expect the next ones to fill in the wick, and that is exactly what happened. Again here, what do you expect after a candle like this? You expect the next one to fill in the wick. Again, for example, let's see. Here, as we can see here, basically what do you expect after a candle like this? You expect the next ones to fill in the wick. So the concept is pretty clear. And obviously what happened, the market actually did fill in the wick. So this is basically a quick trick that you can use to actually be able to understand the direction of the market for the next month, which is a very powerful thing if you are a swing trader. In fact, going down on the weekly time frame, okay, what do we have? On the monthly, as we just said, we had a candle that the next one is supposed to fill in the wick and a double bottom. On the weekly, the wick on the monthly is exactly this retracement here. Now, if you remember, this retracement is exactly what we wanted to see after this impulse to the upside, because always remember, after an impulse, you definitely want to see a retracement. And if you want to measure the retracement, what are you supposed to be doing? Taking your Fibonacci from the low to the high of the impulse. And in fact, the market retraced exactly to the 0.382 of the Fibonacci taken from the low to the high of the impulse, which was also the level that was lining up the best with structure. In fact, here in the weekly, we had this previous resistance, which is now turned support at this area, which the market had broken to the upside. We expected a retest, which obviously came, and then the continuation to the upside. Now, specifically, how did we want to see this retracement happen to the downside? Now, on the daily, that is exactly what we will be speaking about. But before we speak about that, it's pretty clear that after an impulse and a retracement, what do you want to see? You want to see the continuation to the upside. And also here, what did we have? The candle that the next one is supposed to fill in the wick. And that is exactly what happened. So we had the impulse, we had the correction. If you remember, we definitely wanted to see the continuation to the upside. Now, just a quick thing, let's go down the daily and I will show you what I meant 30 seconds ago when I said that the way in which we wanted to see this retracement is very, very specific. Because the way in which we wanted to see the market retrace was, first of all, from here, we wanted to see the market make a move to the upside, go and hunt all the stop losses that were above this level, and then start the move to the downside. And I will link the analysis in the description of this video in which we said that we wanted to see the market go and hunt the stop losses and then start the move to the downside. The link will be in description. So that is how we actually wanted to see the market retrace, and that is how the market retraced, because the big players in the market, if they want to short, they need to hunt the stop losses to actually create the liquidity to fill in their orders. The market retraced, and after that, what did we have? We had the impulse, the correction, possibility to create this inverted head and shoulders, and if you remember, exactly inside of this area here, okay, where we had the possibility to create this left shoulder, head, and right shoulder, exactly here, we spoke about EURUSD and we said from here, we definitely want to see this strong move to the upside. And that is exactly what the market did. And I will link that analysis as well in the description of the video. Now, one of the reasons for which we wanted to see this move to the upside is not only from a technical perspective, okay? Because clearly, as we said, we had the inverted head and shoulders, we had the impulse correction and impulse pattern to the upside on the weekly time frame. We had the candle that the next one is supposed to fill in the wick on the monthly, as we said at the beginning of the analysis. We had the double bottom, as we said at the beginning of the analysis on the monthly. However, there's one major thing that we definitely had on EURUSD. In fact, if we open the COT data, okay, so the commitment of traders, what the biggest banks and institutions were doing on EURUSD, and to see what they're doing on EURUSD, you simply have to check the euro, because all currencies on the spot are traded against the USD. Therefore, if you're checking the data for the euro, what you are actually checking is EURUSD. And what you can see that we went from 147k net positions all the way up to 204k net positions. Specifically, we went from having way more shorts than longs from an institutional perspective on the euro, with 271k shorts and 157k longs, all the way up to having way more longs than shorts from an institutional perspective on EURUSD, which is the completely opposite thing, with 204k longs and 79k shorts. And obviously, the market followed to the upside because institutions were longing it. Now, since we currently have 204k net positions, we definitely expect the market makers to start to take some profits on all these longs, okay? Meaning that what we expect is a retracement from this huge uptrend, okay? Very important to say. So, on the monthly, we had the huge move to the upside, okay? Followed by the double bottom, the market exploded to the upside. We had the candle that the next one is supposed to fill in the wick. Perfect, everything was bullish. However, at some point, specifically here, we expect a retracement. If you're asking yourself why, it's because all this area here was a strong demand area, which is now a supply area. In fact, in all of this move to the downside, there is one candle which is not related to the move to the downside, which is exactly this green candle here. And we expect more or less from this area, the market to start a retracement to the downside. So how we will be approaching this situation with students? So a situation where we have definitely an overextension with a lot of longs getting added. Obviously, the market did exactly what we wanted it to do, and I will link the previous analysis in the description so you can go and check them out. But from here, we definitely expect a retracement. However, can we just take a short? Obviously not, because trading is not predictive. Trading is not predictive, it's definitely reactive. So how are we approaching this situation? Well, very simply, as I said at the beginning of the analysis, monthly, weekly, and daily timeframes are the best timeframes for the direction of the market. But the best time frame for entry is the 4 hours, and which is also the best time frame to understand when the market is ready to actually make the move to the downside. And if we go and see what we have on it, we can see that clearly the market has been creating and is creating higher highs and higher lows. The market is just moving to the upside extremely aggressively, creating higher highs, higher lows, and until the situation will remain as it is right now, we definitely cannot be looking for any shorts because we would be shorting a bullish market. So how are we supposed to approach this situation? Very simply, the longs are there, okay? And institutions will not start to close them until we will clearly see it reflected in the price action. So with students, what we will be doing is monitoring price action all inside of this area, waiting on the 4-hour time frame the market to shift from a bullish market to a bearish market, and only when we will clearly see from a 4-hour perspective that the market will shift from a bullish to a bearish market, only at that point we will add EURUSD to our watch list with students, and at that point we can be taking a nice short with a very good risk to reward and very good probabilities for a move to the downside. Now when it comes to the target, where it will be exactly here. Why here? Because look at where is the level from which the market started all this move to the downside. Exactly here. So this is the previous resistance, which is now turned support here, a strong demand area for this market, at which we definitely expect the price to go to grab some liquidity. So this is what we will be doing with students on EURUSD, and here's the update from our previous analysis, which I will link in description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, I give you a new daily market breakdown showing you exactly how to apply these strategies with the entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, or you can go and check out the next video.